Good morning, all. So, today we are going to continue our topic. First of all, we have already done some points of dissolution. I would like to revise all that for you. If we'll start up from the dissolution point. In dissolution, beta, what you have done? Do you remember? Do you remember what we have done? We have done three cases when all the partners are solvent. Second, we have done when one of the partner or a few of the partners are insolvent, remaining are solvent. And then we have done when all the partners are insolvent. So in the last topic, we have done this topic, in the last lecture, when all the partners are insolvent. Yeah, good morning, Vandana. Good morning, Sushil Kumar, Muhammad, Khalid. Whomsoever has arrived, send your presence in any manner, whatever you like, but send your presence so that I could understand how many are on our live session. And obviously, those who are on YouTube, good morning to all of you also. Today's morning is really wonderful because this is a winter season in North India specifically, and in other parts also there may be a good season. How is the temperature in all areas? Is it cool or is it hot? In our area it is too cold. So yeah, good morning, good morning. Harsh Goel, good morning. Sushil Kumar, good morning. Very good, very good. Maximum loss method and higher relative capital method, very good. Khushi, Rakesh, Ilavar, Sahil, Harsh Goel, very good, very good. All don't sleep now. Start taking classes regularly so that you can clear this exam. So already discussed the importance of this chapter is approximately 20% of your total exam. So I could say that if you will do this chapter with sincere importance, with sincerity, then you will get very good marks and you can clear your group 2 easily because it will contribute 20% in advanced accounting, and advanced accounting will contribute obviously 90 marks approximately. We are expecting 80 to 90 marks or 100 marks in our advanced accounting paper because this paper is always fruitful while clearing this exam. Jodhpur, Rajasthan, it's 10 degree, very good. Bangalore, sir, it's cool here, very good. In Bangalore also cool. Very good, very good. So we have already done that when all the partners are insolvent, what we have to do? We have to allocate the amount to them, whatever amount is available with us in the way, first of all, we have to pay to our secured realization expenses and realization commission, whatever we have to pay. Then what we have to do? We have to make payment to the secured creditors. Preferential creditors means those creditors which are relating to government will be paid first, government dues like that. No? So you may note it down. First of all, we have to pay to the, this is what we are called expenses of realization, and then we have to make payment of government dues, make payment of secured creditors. Then we have to make payment to the unsecured creditors, and whatever is left we have to pay to the partners. But if all the partners are insolvent, normally it happens that firm also declared insolvent because no one is here to contribute to the firm. When firm is going to be closed, obviously we are not able to make payment from the firm's pocket. We need some funds from the partners also. But if partners are insolvent, we are unable to get any amount from them. So obviously in that case, firm also declared insolvent and creditors are paid in proportion. So to come out of this problem, what we have to do when payments are received to us, we are making payment of liabilities, our capital account will be closed by transferring to deficiency account, because in that case we are expecting it's a deficiency to us which has been contributed by the partners. So this will be cross entry. Illustration number 3 was a good example for this. Then maximum loss method we have discussed. In that we are expecting that whatever the amount is received in installments to us. This is not relating to a solvent partner or insolvent. It may occur in any case. Let it be clear. Piecemeal distribution is basically relating to allocation of amount to the liabilities and our partners the way it comes to us. There may be a chance that the firm is solvent in that case, partners are solvent in that case, or partners are insolvent. It may appear in both the cases. So it doesn't have any relation with solvency or insolvency of partner. It have basic relation with the dissolution, that whenever dissolution is there, then what we have to do? Then if payment is received in installments, obviously assets are realized in, this is the actual picture of your dissolution. So this always happen. So this is the most important point. In that case, whenever the amount is realized, amount is received to us, then what we have to do? We have to assume this is the final amount. And the concept, you should have to keep it into your mind that whatever the final loss go to the creditors or to the partners, that is to be calculated properly. So until all the liabilities, outsider liabilities are not clear, you have not to think about the partners. So to make payment to the outsider liabilities, you should have to keep it into your mind the sequence I have given to you for payment of liabilities. After clearing that sequence, you should have to go for the payment of partners. While making payment to partners, the concept you should have to keep it into your mind that the final loss go to the partner after every allocation must be in the profit sharing ratio. As much as possible, we should have to bring them near to the profit sharing ratio. Normally, capital is not in the profit sharing ratio. So what we have to do is we have to use maximum loss method. In that case, we will assume that if this is the final amount, then whatever the total loss go to the partner, that will be allocated in the profit sharing ratio. So accordingly, we have done in this method. In highest relative capital method, again, we have assumed that profit ratio loss should be borne by them in the profit sharing ratio. So for that basis, we have allocated their capital in such a way that surplus is calculated, and that surplus will be given to the partner who has contributed surplus capital first. So in that way we have done it. So having any doubt in those, please tell me. Sir, how to find, Harsh Goel, sir, how to find that when partner will reimburse for the revaluation loss by bringing money? How to find that when partners will reimburse for the revaluation loss? Okay. This is in case of insolvency of few partners. Then the solvent partners will bring the amount equivalent to the revaluation loss occurred to them. Good question. It meant so you have read it. Okay, good, very good. Any other query? Any query from the illustrations of your ICAI module? Any query from the notes given by me? Have you received my questions? Peta, have you received my questions? That has been uploaded for you for the practice. You must have to do all those questions because there are limited questions in your module, and after doing those solved questions, you are not able to solve that in exam because the issue is you doesn't have any unsolved question with you. So I have given you some unsolved question. Let's discuss about those questions. If you have any doubt, we may do that. So that has been given to you in homework. Question number 12 given by me. Question number 13 and 18 given by me. And many more questions which have been given by me. Have you done those questions? Please tell me. These are the questions. No, sir. Harsh Goel, that's very bad. Sir, your notes have not been uploaded yet. According to my information, notes are already uploaded. You may please check your system because I have confirmed from the ICAI person. They says notes are already uploaded, my dear. Madhili, please check and confirm whether anyone has got my notes. बेटा बताओ किसी को notes मिले हैं कि नहीं मिले अभी तक? Because notes are already uploaded according to my information. Please check. Otherwise, I would like to contact ICAI once again for uploading the notes because those are very good questions. So having any doubt in ICAI questions, then tell me. If it doesn't receive the notes, then tell me, is there any doubt in the ICAI questions? Questions not yet uploaded. Okay, Harsh Goel also says, Khushi also says, everyone says. Sir, please upload the notes at the earliest because students are suffering this problem. Doesn't matter. I would like to try to tell to ICAI to upload notes in the break. When the break will be there, after the break, there may be a chance that the notes will be with you. I would like to try. Till then, no problem. See illustration number 8. Ajay Enterprises, a firm. This is a method of piecemeal distribution. So just review the piecemeal distribution so that after piecemeal distribution, we will go to the amalgamation. Check if the notes are uploaded. That's very good. Sithumal says notes are uploaded. Question number 5 of ICAI module. So let's do that because that is a query by Harsh Goel. So it's better to solve that whatever is the query of the student because now I would like to cover that first. Then I would like to come to the next topic. Illustration number 5. Question number 5 of ICAI module. Okay. Question number 5. Yeah, see here it is. The partner A, B, and C have called you to assist them in winding up the affairs of their partnership. Balance sheet is given to you. Beta, see the question. Question number 5. Question number 5. Muhammad says notes are already uploaded on 17th of January. Really good. Sushil Kumar also says questions are uploaded. So beta बाकियों को क्यों नहीं मिले? Others can't get it. Why? Please check everyone notes are already with you. So if notes are with you, I would like to discuss those questions because those are unsolved questions. Muhammad, Sushil, Sithumal, have you done these questions? If you have got the question, have you done these questions? If you have done, then please tell me if there is any doubt. I would like to clear those doubts also because those are unsolved questions and students must be clear on each and every question. So that's very important. Now, see question number 5 first, then I will like to come to the notes also. So in winding up, we should have to assist them. Balance sheet is given to you. Partner share profit in the ratio of 5:3:2. The cash is distributed at the end of each month. So it is very much clear that allocation will be made at the end of each month. Summary of liquidation expenses are given. He says 16,500 is realized from debtors. Remaining is not realizable. If some amount is not realizable, that will be left. That will be a loss to us or profit to us as per the case. 10,000 received from the sale of entire stock. In July, we have received total 16 plus 10 plus 1. So it is 27,500. He says we have to retain cash worth rupees 8,000. But remember, there may be some cash available in your balance sheet also. That is 6,000 rupees. So that is also to be kept into mind. 6,000 is the opening cash available with you. Plus you received some cash, 16 plus 10 plus 1. Finally, whatever is the amount, less 8,000 to be retained, that will not be allocated. Remaining will be allocated. And the amount will be first given to whom? That you should have to know. In every method, if there is a maximum loss method or highest relative capital method, amount will go to the creditors first. So after making payment to the creditors, you will have to go to the partners. And in partners, you should have to make payment to the partner's loan account first. Okay, my dear. August also, liquidation expenses paid as part payment of his capital. C accepted a piece of equipment. So this will be reduced from the C's capital account. Good question. Cash retained at the end of the month 25. So whatever is the opening cash, that is 8,000 rupees is with you. We have to add whatever the amount comes to us. Now no amount come to us in this case because in August there is no sale. Instead, out of 8,000, 1,500 is to be deducted as an expense, 2,500 is to be retained, balance is to be paid to the creditors or the partner's loan, whomsoever is eligible to get the amount. Sharon is asking where to download the notes. Just wait, Sharon. I would like to tell to some student that they may send a option because I doesn't know from where these notes are to be downloaded. Just wait. Just see the illustration, practice question number 5. This is a very good question. From examination point of view, it will come into your exam for 16 or 20 marks. This is a very good question. September, we have received 75,000. After deducting 1,000 as expense, remaining amount will be allocated. So you have to prepare schedule assuming highest relative capital method. So I would like to say you must have to do it because this is a very good question. Do it on your copies. It will be easy to do it if you will understand the concept. I'm not going to make a proper performer, or I'm not going to make a system to solve it. I would like to just discuss with you the important aspects of this question. So to discuss the important aspects, first I would like to show you the solution because solution is good. Solution is already given. Whatever point is not clear, I would like to discuss that. No? So that is given to you. You have read the question. No? Beta, when you will read the question sincerely, you will be with solution in your mind because solution is always in your mind. So let it be clear. Now, first of all, whatever amount is to be paid to the creditors and partners, that is given to you 17,055. He says after working note number 1. So see working note number 1 first of all because working note is given to you. Balance of capital account is given to you. Now, balance of capital account is to be adjusted with the partner's loan because in this case partner's loan is on the asset side. So that means for partner's loan is a liability for the partners and asset for us. So that is to be deducted from the liability amount payable to them. We have to deduct it. So after deducting, this is the final amount which is payable to the partners. 55, 37,500 and 31,500 that we have taken as a opening balance as I have discussed with you in the last lecture also. Now opening balance plus whatever amount we realization less expenses and cash retained. So that we have done amount available and paid. So that is done. Now I have already discussed with you that this is to be calculated. This amount is to be calculated 17,500 after deducting whatever the expenses or whatever the cash to be retained by us. He has already mentioned that 8,000 is to be kept as a closing balance with us. So that is to be kept. How much is your expenses? There is no expense in this. मुझे लगता है इसमें तो कोई expense नहीं है. There is no expense in this. Okay. So that is to be deducted. Means we have another 8,000 also with this, but that 8,000 is not allocated. So total amount realized, whatever the total amount realized minus, we have to make 8,000 and get the balance, that is 17,500. Now total amount is 23,500 that will be allocated. Now how it will be allocated? First of all, you have to make payment to the creditors. 17,000 in full. You need not to worry that whether it is mentioned that how much payment is to be made to the creditor. You need not to worry. Whatever the total amount payable to creditors, give it. Now, whatever is the balance left with you, out of 2300, 500, 17,000 is paid. So balance with you is 6,500. To whom it will be paid? So for that, you should have to go for the highest relative capital method that he have given you. See the working out. Working out. Very easy. Just understand the concept. What we have to do is, whatever the balance is there, we have to divide it with the ratio. Whatever the ratio, profit sharing ratio is there, we have to divide 55,000 with 5. We will get 11,000. 37,500 divided by 3, 31,500 divided by 2. Whatever is the balance, you have to get lowest out of these. Whomsoever is the lowest, that is a per unit. We have calculated per unit balance. So per unit balance is 11,000. This is the lowest one out of these three. 11,000, 12,500 and 15,750. So lowest one is 11,000. Now what you have to do? You have to multiply 11,000 with 5, with 3 and with 2 to calculate the standard balance, to calculate the standard capital of each and every partner. If capital of A is 11,000, what should be the capital of standard capital of A? It should be 55,000. It should be 33,000 for B. It should be 22,000 for C. Now deduct it, you will get the balance. From where you have to deduct it, A minus B. Means this is A, opening balance. Out of this balance, this is the opening balance for you. Because partner's loan is already adjusted. So 55,000 minus 55,000, it is 0. 37,500 minus 33,000, it is 4,500. 31,500 minus 15,750, it is 22,000. Now it is 95,000, sorry. 31,500 minus 22,000. Minus 22. It should be, it is the actual capital. You may note it down even. It is the actual capital. And it is the standard balance. So what do we have to do? Actual minus standard. We will get the amount which is the final amount excess of C's capital and B's capital. That is 4,500 and 95,000. So how much amount is with us? We have, according to this, we should have 14,000 with this. Whether we have 14,000 with us, please check. See, we have only 6,500 with us. So we have only 6,500 with us. What do we have to do now? So first allocation should be according to the 6,500, whatever the amount is with us. Okay. So what you will do now? You will again divide these two amounts with their profit sharing ratio. Whatever is their profit sharing ratio, that is 3 and 2. Now this is to be divided. 4,500 is to be divided with 3. We will get 1,500 as the unit. 9,500 divided by 2. Because this is a surplus of these two partners. If this is the final amount, we are unable to get more amounts, then what we have to do? We have to give the 6,500 to that whomsoever is a surplus capital. So divide it. 1,500 is the lowest one. 1,500 into 3, 4,500. 1,500 into 2, 3,000. Okay. So that you will do. Again, assuming it as actual, it as standard, assume it as 3, it as 4 and do 3 minus 4, and you will get this amount. 4500 minus 4500 is 0. 9500 minus 3000 is 6500. This will automatically come. This will be equivalent to the amount which is payable to us, payable by us. So 6500 is a surplus amount which is payable by us to the. If it is 8000, even then we have to pay to C 6500. Balance 1500 will be paid first when next amount will be realized. So what it meant for, you should have to understand the concept. This meant for while making the payment, this is a final thing. So now we have to make a chart for us, for our understanding. So whenever first realization will be there, A, B, C. C will be paid 6500. Then whenever next realization will be there, in the next realization, means not in the next realization, even we can say after satisfying C with rupees 6500, next is you will have to pay to the B and C. And B will be satisfied with 4500 and C will be satisfied with 9500 minus 6500, which is already paid. Means in the next system, B will be satisfied with 4500 and C will be paid. 9500 is to be paid in total. 6500 is already paid. So he will be paid 3000 only. Then after then, means when they will be paid, even if they can be paid this amount in one installment or in two installments or in three installments, this is not a matter. If only 2000 rupees will come, obviously that will be given to B and C in 2:1, in 3:2, because 4500 is to 3000 is the 3:2 ratio. And then A, B and C will be paid in their profit sharing ratio, because then the amount is in profit sharing ratio. You should have to understand this thing, that first of all 6500 will be paid to the surplus partner, whomsoever capital comes surplus. After then we have to make payment to the partners who have surplus capital up to the amount whatever is the total amount payable to them minus already paid. So the total amount payable to them is 14,000, out of which 6500 is paid as a surplus. So they will be paid 2500. So you can say that first realization of 6500 will be paid in this way, then 7500 will be paid in this way. Means 6500 up to 6500 you will have to pay to the C only. Then after then up to next 7500 you have to pay to the B and C in their profit sharing ratio only, but A will not be paid anything. After then whatever is balance with you, that will be paid to A, B and C in profit sharing ratio 5:3:2. This is the highest relative capital fundamental concept. Means after preparing that table, you should have this format with you to solve this question. Now this question will be automatically solved. Copy this. Better those just do this question first, then we will come to the point of notes also. Okay, better. Now, is that clear? Please tell me. If it is clear, बेटा आगे चलेंगे हम तभी. See how the payment is made now. Now payment is made in the way I have mentioned to you, that first of all 6500 will be paid to C. Is that clear? Then up to 70, next 7500 they will pay to B and C in 3:2. So see, opening balance is 8000 minus 4000 is the expenses and the cash to be carried forward 1500 and 2500. So balance is 4000 with us, that will be allocated to B and C in 3:2. But before that, there is an important point. Here B comes, cash paid to B, and here C comes to us. He said, I need an equipment of 10,000. Now he is interested to get the equipment. He is not interested to get the cash. So the concept change. Here the concept changes. You have to give equipment to C. Now your way is changed. Now C is entitled to get only 3,000 rupees, but instead of getting 3,000, he has taken over the equipment for rupees 10,000. So it means for now he will be in the benefit. He has extracted or he have received an amount more than the amount to be received by him. So he have received 7,000 in excess even. So that is a separate issue now. It means for we need not to pay any amount to C. Instead, what we will go? We will make payment to B only, because B is having a surplus capital up to rupees 4,500. C has been settled, but B is not settled. Even C is overdrawn. So we will discuss that in the next line. But before that, we should have to clear this amount also. This amount will be paid up to 4,500 to B only. First of all, you have to satisfy B. So due to that reason, they have made payment to B for rupees 4,000, yet 500 is yet to be paid to B. So opening balance is there. Amount realized less expenses. Now, how this amount will be paid? How this amount is to be paid? That is to be checked again. Once again, we have to go for the working note. Now we have to work on this reallocation of this work again. Once again, scheme of payment. Yeah, there may be a chance that we doesn't need to prepare this chart once again if C doesn't take over the asset, because if C doesn't take over the asset, the allocation will be in a smooth manner, and the performa I have prepared for you is sufficient. This is a sufficient thing. Once you have done it, the question is solved. But this is the next level of the question. Means you have to prepare statement once again, because now again misappropriation is misallocation is there. Now the balance again affected. Now you have to get the balance once again. Whatever is the balance, that is 55,000, 33,500 and 15,000. See the balance from there. You have to get this balance now. That is the opening balance of September month. After making payment of August, you have to get this balance 55, 33,500 and do the same process once again. Whatever the process you have done in the previous concept, you have to do the same concept once again. Divide it with profit sharing ratio. Then whatever is the minimum unit, that is 75, and that will be multiplied with 5 to get this, multiplied with 3 to get this, multiplied with 2 to get this. Now whatever amount comes to you, that will be deducted from this A minus B, and you will get the surplus. Now this surplus is of two partners, and the total amount is 17 plus 11, 28,500. This is 28,500. Now this is again divided by 5:3 with the profit sharing ratio of these two partners, 5 and 3, and again calculate the per unit, because we have to calculate the final surplus of a single partner, whomsoever is there. So it is multiplied with 5 and 3 to get this amount. So it means for 500, excess of B's capital over A's capital. How it is calculated? You have to deduct, assume it is C, it is D, that is actual minus standard, get the balance C minus D. So this is 500. So it means for first of all, C will be paid 500. After making payment to C, you will have to allocate further amount of, means 28,500 minus 500 will be paid to C only. Balance 28,000 will be allocated in 5:3 ratio. 17,500. Obviously, you have to make the reverse chart once again now. Again, A, B, C. Now, September month का बना रहे हैं हम लोग. This is for September. So first allocation will be of 500 to B only. Then next you have to allocate amount of rupees 28,500 minus 500. That is 28,000 in 5:3 in profit sharing ratio. So it is 17,500 and 10,500. And then next, whatever is the balance with you, that will be allocated in 5:3:2. Means here also it is 5:3. This is what? This is 5:3. So finally, now how much amount you received? In September, we received 74,000 plus 2,500, it is 76,500. So you have to allocate 76,500. How it will be allocated? That will be allocated according to this concept. First of all, B will be paid 500. Then they both will be paid this amount. And whatever is the balance. Now, what is the balance with them? Total is 76,500. So 76,500 I would like to write here because it will be more visible to you. Minus already paid 500 minus already paid 28,000. So whatever is the balance with you? 48,000. It will be allocated in 3:2:1. 48,000. It will be 9,600. It will be 14,400. It will be 24,000. So it means for A will get it total. He will get 9,600. He will get 25,400. And A will get 41,500. So is that same? Is that same? Abhijit, CA, doing CA is always an advanced thing. No one, a simple person can do CA. A complicated person can do CA. So Abhijit, questions are also very complicated, but it is very simple if you will do it with the system. The first system is you have to prepare a table, which I have mentioned to you. Then second is you have to make its allocation. And third is you have to prepare this one for making good allocation system. This is a double question. This is not a simple question. It will minimum come for 20 marks. This is a double question, 20 or 25 marks even. This is not a normal question. Normal question which of higher relative will, in which one table is required only, it will come for 16 marks. This type of question will come for 20 or 25 marks. So if you have to earn more, you have to give more time. You have to give more services. This is all a system of demand and this is all a system of economics. कुछ पाने के लिए कुछ खोना पड़ता है, कुछ पाने के लिए मेहनत करनी पड़ती है बेटा. So 76,500, sir, please explain. Okay. Sharon, just see once again. 76,500 I got from where? I would like to show you the question. It is more better because I doesn't remember that na. Just see the question, beta. Yes, 75,000 received on sale of remaining plant and machine equipment in September. 1,000 is the liquidation expense, so this is to be deducted. 74,000 here, beta. Okay, is that okay, beta? It is 75 minus 1. It is 74,000. And we have opening balance of 2,500, which will come from the previous month. So it is beta 76,500. Maybe it is clear, beta. So 76,500 minus 500 minus 28,000. 48,000 is less. First of all, 500 will be paid. Then this 28,000 will be paid. And the whatever is the balance that will be allocated in this way, 24,000, 14,000 means the concept is very simple. First of all, you have to make surplus to the partner. It may be normally one partner who has a final surplus amount with you. Then you have to make payment of surplus to remaining partners in their profit sharing ratio. Like in this case, the surplus comes for B first. So B will be paid first. Then surplus is of A and B worth rupees 28,500. Out of which 500 is already paid. So 28,000 will be settled to them. So that we have paid. From where I have taken this amount? I have taken this amount from here. The allocation made by you. This is the allocation made by me. Now made by the ICAI module. 17,500 and 10,500. This was the amount, out of which 500 will be paid first. Then this amount is to be paid off. This is total 28,500 minus 500 already paid. So 28,000 will be paid. Then obviously we will come back to the main partner. Then what will happen? Then whatever the amount left, that will be allocated in this ratio. 5, 5, 3, 2, because in that case the amount left with you, the balance left for each partner will be this one. You may see that this is the balance left with you after making payment. So you may see that. So expecting everything is clear, beta. Highest relative method is clear to everyone. Please tell me. Any doubt in any other question? Yeah, one more thing. In ICAI BOS app, there is ICC section. Beta, see where the notes are uploaded. Just see, notes are uploaded in ICAI app. In ICAI BOS app, there is LCC section in which there is option for downloading notes. So the notes can be downloaded. First of all, notes are already uploaded at ICAI website, means portal, SSP portal. You may check there. Then in app, a student has sent that Miss Khushi has sent. In BOS app, there is a LCC section in which there is option for downloading notes. Here you can download the notes in LCC section. Okay, beta. Sir, please tell about illustration number 6, beta. लो अभी कर लेते हैं. There's no worry. Beta, come to illustration number 6. Those who have done are really wonderful students because they will clear this exam. And those who have not done must do it to clear the exam, because to clear your exam, you should have to do the questions, beta. If you will not do the questions, if you will not do the practice, how you will solve this? How you will get this clear? This is very typical. This is very typical if you will not solve these questions and do not do the practice. See, what is the problem in this, Rohan Jain? Please tell me. Rohan Jain has asked about the query of Yash, illustration number 6. Let us see all those. Yash, Tanish, and Ruchika were partners. On 1st of April, all the partners agreed to form a new company, beta, which will take over the firm. Beta, just wait. This is not yet covered. We will cover this, then you will be able to do it. This is not yet covered, beta. This topic is yet pending. Don't worry. Maybe this question has come wrongly here. YTR. Just a moment. I will have to check the question once again, beta. This is basically beta conversion of a partnership firm into company. So this topic is yet to be covered, beta. Just wait. No notes are not uploaded. I am checking now. No problem, beta. You may download it from the IC website and also tell them, I will tell them that they will have to upload the notes. No matter the purchase consideration part. Beta, just wait, Rohan. I would like to cover that topic now, because that is the next, that will come in the next topics. Then we will do this. You should have to do this question. Illustration number 6 belongs to conversion of a partnership firm into a company, that will be discussed in the coming topic. So even in that amalgamation, you have covered number of things. All of you have done amalgamation now. If you have not done, please see very seriously to all the points, whatever I will discuss with you. In this case, accounting procedure is very simple. You know it better. What meant for the revaluation is amalgamation is. What meant for the amalgamation is? Amalgamation meant for when two partners amalgamate with each other. There is a partnership firm A. There is a partnership firm of AB. A and B are two partners. Another firm of X, Y, and Z. Both are interested to amalgamate their firm and interested to make a new firm. That is called amalgamation. Or there is a partnership firm AB. Another partnership firm is XYZ. AB Limited is interested to merge its business, its firm into the XYZ. This is also covered under amalgamation. Okay. So normally these are the two cases. One is when two firms, when all the firms merge into a single firm, and second, this is a new firm. Obviously, this will become a new firm. Formation of a new firm in this case. And this is what, there are two existing firms or three existing firms or five existing firms. Now, one of the existing firm will become the main firm. Remaining firms will be merged into it. So this is also called amalgamation. Now, What is the accounting procedure in this case? What is the accounting procedure? Accounting procedure is very simple, very easy, very normal. Let's clear it. Each firm will have to prepare a revaluation account relating to its own assets and liabilities and transfer the balance to the partner's capital account in the profit sharing ratio. Means they will have to prepare revaluation account in which they will revalue their assets and liabilities. Whatever balance comes to them in the form of profit or loss, that will be transferred to partner's capital account. Very simple, already done by you in previous classes. Then goodwill will be raised if required. If required, goodwill will be raised. Those assets and liabilities which are not taken over by the new firm will be transferred to the partner's capital account in the profit sharing ratio. In the ratio of their capital, sorry, in the ratio of their capital. Then new firm, what new firm will do? Before that, I would like to suggest you to please take a screenshot of it. It is a summary of the accounting procedure to be followed by the merged firm, merged, which has been merged, which will not remain into existence, which will come to the end. He will prepare revaluation account first, or whatever the assets and liabilities to be taken over by the new firm or sold. Normally, there is no, it is not solved. It is normal. It is not sold. Instead, normally it is transferred by the taken over by the new firm. If it is taken over by the new firm, the value at which it is taken over, for that adjustment, we should have to prepare revaluation account as we were preparing in the earlier classes of partnership. You remember that? Doesn't matter. We will see it in the coming illustration. Then whatever profit or loss occurs to us, that will be transferred to partner's capital account. Point number 2, you have to raise the goodwill. Means goodwill entries will be passed. Obviously, when the firm is merged or firm is amalgamated, then we should have to revalue our goodwill, because in that case goodwill must be paid off. So entries for goodwill will be passed. That is normally same entries which we were doing earlier, goodwill account debit to partner's capital account, or in partnership it was there that the goodwill is to be sold off. Accordingly, we will pass the entries. And those assets or liabilities which are not taken over by the new firm or the merged firm will be transferred to partners in their capital ratio. Assets and liabilities not taken over by the new firm should be transferred to the capital of the partner in the ratio of their capital. Is that clear, beta? Rakesh, you are asking what about the surplus loss with amalgamating partner? Beta, that loss is a loss that is to be borne by the partner, so you need to worry. The accounting procedure in new firm. The new firm is purchasing the assets from some other one, is taking over the liabilities from some other one. So what he will do, assets account debit to liabilities account. And whatever excess payment he will make, obviously he is taking over the assets for rupees 5 lakh, liabilities for rupees 1 lakh, making payment of 3 lakh as purchase consideration, then 2 PC to purchase consideration. Partners capital account should be transferred to the new firm. For that PC, obviously partner's capital account will be adjusted, because he is not going to make payment to the partners. Instead, he will take over the partners also, because the partners will also merge in the new firm. So accordingly, first entry is assets account debit to liabilities account. The new firm should be debited with the difference between the value of the assets and liability taken over by it. The asset should be credited and liabilities debited. Okay, sorry. This is the process. This is the procedure in merged firm yet, because this is the point number D. Sorry, I have gone forward. So in the existing firm, First entry is revaluation entry, means if assets worth rupees 10 lakh are revalued for rupees 12 lakhs. So what entry will be passed? In that case, we are in the profit. So assets account debit to revaluation account with rupees 2 lakh beta. Clear? Liabilities worth rupees 4 lakhs are valued for rupees 2 lakhs only. So this is again, this was the profit. This was a profit. Hence, asset value is increased. Revaluation account is created. It is a nominal account. Now, in the case of liabilities, what happened? There is a loss to the firm. So revaluation account debit to liability. Value of liability is, okay, sorry. Liability taken over at lower value. So that is a profit to us. Liability account debit. If liability is reduced, it is a profit to us. If liability asset is increased, it is a profit to us. And vice versa is also known to you. So whatever is the profit or loss on this revaluation account, that will be transferred to the partner's capital account. Revaluation account debit to partner's capital account in profit sharing ratio. So it will be 2 plus 2, 4 lakh. So there is a profit of rupees 4 lakh. Assume the partners are A and B only, and the ratio is 1:1. So 2 lakh each will be allocated to them. Then any asset which is not taken over by the new firm will be transferred to the partner's capital account in capital ratio. That has also been mentioned. Asset not taken over will be taken over by the partners. So that will be partners capital account debit to assets not taken over. Then rupees 10 lakh are taken over for rupees 12 lakh. So here it will be 12 lakhs. Liabilities worth rupees 4 lakh are taken over for rupees 2 lakh. It will be 2 lakh. Remaining 10 lakh will be XYZ limited. This is balance XYZ. This is balance figure. Because assets will be credited while transferring credit what goes out. Liabilities will be debited while transferring XYZ will be debited as a receiver. Okay. Then partner's capital account should be transferred to new firm account. So next is partners capital account debit beta, that is A and B debited to X, Y, Z. So these are the entries which is to be passed. Take the screenshot if required. The above steps will close the books of the old firm. Then the new firm comes into the existence. New firm will do one thing. He will debit because he receives the asset. So he will debit assets account. So assets at taken over value, at the agreed value. Credit liabilities at the taken over price. Credit partners capital account with the closing balance in the erstwhile firm, means whatever their closing balance in the previous firm, they will be credited with that amount. Then when firm is merged with another firm, entries will be passed as a pattern of, in the pattern of winding up. So that must be clear to you. Other firm will record the transaction at that of business purchase, means the firm who is merging will assume that my business has been closed, and the firm who is purchasing will assume that I have acquired a new business. So we have to solve illustration number 1. Before that, I would like to show you once again the entry in the new firm. in the new firm or in the merged firm, in the merged firm, in which firm he is merged, what he will do? Assets debit 12 lakhs in the as in the given case. Partners capital account debit with how much? Whatever is the balance in old firm. Two liabilities. Obviously 2 lakhs. This will be the entry passed in the new firm. Is that clear, beta? So we have to see illustration number 1 of amalgamation chapter. Amalgamation of partnership firm chapter. पानी पी लो. Read this illustration, beta. Out of these two chapters, one is dissolution and second one is amalgamation, sale and conversion. You surely get minimum 20 marks question in your exam. So be sure that you have done it very seriously and you know each and every concept of it. But these concepts are only lengthy. Otherwise, these are easy. This is a time consuming thing. So you can speed up your way of speed up your way of doing the questions, because once you will increase your speed, it will be really very easy to do that and you will easily get marks in the exam. This will not be a chance that you will do it wrongly in the exam. Once you will remember it, to remember it, you should have to do more questions. I've already given the questions to you. You may please solve those questions. I would like to tell them in the break that they must have to upload the question according to the system made by them. So it will be better for you. B and S are partners in profit sharing ratio 3:1. S and T are partners sharing profit in the ratio of 2:1. So there are two firms. One is S and company, second is 2E and company. Decided to amalgamate and making a new firm named BST and company. So in this, there will be three partners, B, S and T. Obviously, there are three persons only because S is a common partner in both the firms. Ratio will be 3:2:1. So this is very clear. This is a case of amalgamation because obviously merger comes into the picture. So their balance sheet is given to you. The balance sheet of both the firms is given to you. Some inter transactions are also there. Inter assets or inter liabilities are also there. The amount payable by S and company to T and company and T and company to S and company is also there. Amalgamated firm took over the business of the following terms. Goodwill is to be taken over. Goodwill account was not to be opened in the books of the new firm. So adjustment being recorded through capital account. Do you remember the adjustment we are making through capital account earlier? Remember that. I would like to discuss with you. Assets are taken over at the values given to you. Doubtful debts are also there. required to compute the adjustments necessary for goodwill. Pass the journal entries in the books of BST and company, assuming excess or deficit capital with reference to shares in profit are to be transferred to current account. So very simple and easy to do. Don't worry about this. He has tried to give you an understanding of adjustment of goodwill. So that we will do, doesn't matter. Let's understand this. In this case, how much is the amount of the goodwill valued by them? For that, you should have to see goodwill of S and company is 60,000, whereas T and company is 50,000. That's it. S and company profit sharing ratio is between B and S, that is 3:1, and T and company profit sharing between S and T is 2:1. That's very simple. So B, S, T, three partners are there. B, S, and T. Three partners are there. In S and company, goodwill is 50,000, and the ratio is clear to us. This is 3:1. Goodwill of T and company is 60,000, and the ratio is 2:1. And in the new form, there are three partners, B, S, and T. Ratio is 3:2:1. New form, B, S, T. Ratio is 3:2:1. That's it. So this is a fundamental thing given in this case. Now you should have to remember the entries which you are doing in the goodwill chapter at the time of raising of goodwill. So when the goodwill is raised, you should have to remember that goodwill account is to be debited and partners capital account is to be credited. Remember that? So first of all, what is the amount of goodwill that is given to you? It is 50,000 and 60,000. It is S and company 60, T and company 50, sorry. It is 60. Yeah. So in B and S, that is in S and company, what was the entries to be passed? Remember, goodwill account debit to partners capital account, that is B to S. Amount was 60,000. Ratio was 3:1. So it will be 45,000 and 15,000. Is that clear, beta? In profit sharing ratio. Then it is to be written off. If it is not to be kept in the books of accounts, then what we have to do? We have to write it off. B debit, S debit to goodwill account. Now this should be in the new profit sharing ratio. This should be in the new profit sharing ratio. There you have done in the previous class. That is when the change in profit sharing ratio is there, then goodwill is to be adjusted in this way. Now new profit sharing ratio is to be calculated, and this entry is to be passed only when we will make all adjustments related to goodwill. So this entry will be kept pending for a while, for just a while, nothing else. Then in T and company, entry will be passed, goodwill account debit in T and company, to S to T. 2:1 the ratio. 2:1 is the ratio. Amount is 33,333, 16,667. Now this is we have raised the goodwill. When we have to write off the goodwill, that will be written off in BST. We will assume that it is just like a profit share change in profit sharing ratio. In the new firm, the partners will be debited with BST in the new ratio. What is the new ratio? 3:2:1. To goodwill. Goodwill is to be written off. So what is the value of goodwill? 1,10,000. It is 60 plus 50. So this will be allocated in 3:2:1. 18,333, 36,667, 55,000. Do you know how I have calculated it within minutes? There's no need of using too much calculator. What I have done, I have divided 1,10,000 divided by 6. 3 plus 2 plus 1. 2 plus 1. That I have done on the calculator. It comes 18,333. Now it is 18,333. Then it is obviously 3:2:1. It is equivalent to T. When I have to calculate S, I have to just multiply it with 2. 18,333 with 2. That is in my mind. I know the table of 18. 18 into 2, 36. Then when I have to calculate this one, I have done 18,333 into 3. Again, table of 18 helps me. 18 into 3, 54. 54,000 plus 333 into 3. This is 55,000. So I've done it manually. It saves the time. In exam, you need speed and way of presentation. So two things are always required. Try to increase your speed to a good extent. Okay, my dear? So let's understand this. So this is done in the working note. This was just a detailed knowledge of that. Whatever is done in the working note, check in working note what he has done. He has done the same. He has credited B and S with 45,000 and 15,000, and S and T with 33,000 and 16,000, and then make it totaled that this has been credited with this amount, this has been credited with this amount, this has been credited with this amount, and then make it debited. That I have done for you: 55,000, 36,000, and 18,334. And then what he has done? He has get the balance difference. So how the difference is to be done? That is by passing a journal entry, or that is by making an adjustment. So that he has done 55,000 minus 45,000, 55,000 debit, 45,000 credit. So it will be 10,000 debit, 36,000 debit, 48,000 credit. So he will be credited with the 11,667, and then he is to be credited with this, debited with this. So net is 1,667 debit. That I have done here also for you. Accordingly, you may pass a net entry that B is to be debited with 45,000, credited with 45,000, debited with 55,000. So B debit 10,000, S credit 18,333 minus 36,667 minus 15,000 and minus 33,333. So he will be credited with 11,667. Then T जो है हमारा, what is T? T is to be debited with 18,333 minus 16,667, 1667. So that I have done for you so that you can understand it in a better way. Maybe is it clear? Is that clear better? Now, in the books of BST and company, the entries are very simple. Remember that these entries are not typical at all. Even I would like to pass entries in both the books. First of all, whatever the assets are taken over, he has taken over all the assets. So it is in the books of purchase, merged company, a new firm. The new firm has been framed, and new firm will pass a simple entry, very simple. As he has taken over all the assets and liabilities, nothing is mentioned, so we will assume all the assets and liabilities are taken over. Cash debit, bank debit, leave these due and due from, debtor debit at the value given to you, stock debit at the value given to you, furniture debit, vehicle debit, machinery debit, building debit. To creditors, that's it. Reserves will not be transferred. Reserves will not be transferred. So very simple entry. As mentioned, accordingly entry is passed, cash debit, bank debit. Now, what about T and company and X and company? That is to be kept into mind. I would like to discuss with you. Cash debit, bank debit, debtors debit, stock debit. This is the value at which it is taken over. Furniture, machinery, building, provision for doubtful debts, creditors. Now I have done it in two entries because I have tried to let you understand this concept in an easy manner. So that I have done, that partners are to be credited with the amount of partners capital account. So that we will do. Now in addition to that, he says T and company and S and company have a intercompany balance with you. That is given to you. So due from T and company is 50,000. And due to S and company is 50,000. So it's a contra entry. When you will take over the assets of S and company, you will also take over this. And when you will take over the liabilities of T and company, you will also take over this. And after taking over this, you will pass a contra entry. By reversing these two accounts, automatically it will be closed. You have taken over it. This is the entry, contra entry, mutual indebtedness, S and company to T and company, reversal. Debit will be credited, credit will be debited. Okay, then in the same way, we have taken over the other liabilities. X and company is an outsider, so his liability will also be taken over. His assets will also be taken over. So all that will be taken over. Now how they have calculated the amount, that we will discuss now. Balance of capital account. Before that, I would like to discuss with you the concept of passing so you may prepare partners capital account also in working note, or you may do it in this way also. This is all up to your choice. Obviously, it is difficult to do in this way because in this case, you will have to go into very lengthy process. So it is up to your choice. You may prepare. That is all up to your choice. That how you are going to present it. Like in the given case, if you are interested to check how much profit is there, you should have to calculate the profit by preparing a revaluation account. So if you know the concept, you can prepare the revaluation account very easily. I would like to let you understand the concept first. See, the concept is very simple. Whenever there is a profit, revaluation account will be debited, will be credited, and whenever there is a loss, revaluation account will be debited, because revaluation is a simple nominal account. So here you will have to calculate first of all the profit or loss occur to the partners. So for that sake, see, no changes will be there in cash in hand and cash in bank. Only the point comes for the debtors. So the value of debtors is changed in this case. His debtors are of rupees 80,000, 60,000 stock, furniture 10,000. I would like to write it down for you. 80, 60 and 10. Debtor, stock and furniture. There are two forms with us. So first of all, I would like to do for the one form, S and company. So his debtors worth rupees 80, stock worth rupees 60, furniture worth rupees 10,000. Any other asset? Just solve it. Machinery 75, building 25. Machinery 75, building 25. So these are the assets available with him. Is there any change in the value of assets? See. See, is there any change in the value of assets? Yes. He says building, machinery and vehicles were taken over at 50, 90 and 1 lakh. So building and machinery are worth taken at 50,000 at building, 90,000 at machinery. Building 50,000, machinery 90,000. Note it down with you. Note it down with you. Provision for doubtful debt to be carried forward at 4,000 in respect of debtors of S and company. Nothing else. So S and company 4,000 is the provision for doubtful debts. So this is a loss, obviously. No change in the value of stock maybe, because nothing has been mentioned. Okay, no change in other things. So just calculate the profit or loss on revaluation. How much is the profit or loss on revaluation? Here we are getting a revaluation. So let's understand the concept. Whenever there is a profit to us, revaluation account will be credited. Whenever there is a loss to us, revaluation account will be debited. This is one thing. Second is revaluation profit will increase whenever there is a profit, whenever there is a benefit to us. Revaluation loss will be there or minus will be there. Profit will be decreased when loss is there. So here we are suffering from a loss of rupees 4,000, because you know it better, when the provision for doubtful debt will be created on the debtors, that means for our value of debtors has been decreased. So this is a loss to us. Now it remains intact, so there is no profit or loss. Here machinery value is increased by rupees 15,000, so there is a profit. Here building value is also increased by rupees 25,000, so there is a profit. So we got it. The final end is with us 36,000. So 36 is the profit on revaluation. If it is a profit on revaluation, it will be allocated in the ratio of 3:1 maybe. What was the ratio? It was 3:1. Okay, my dear. So it is 3:1. 36,000 divided by 4. It is 27,000 and 9,000. 27,000 and 9,000. So this is the profit which will go to the partners capital account, and partners are S and B and S. There are two partners with us, B and S. No? B and S, there are two partners. So what do we have to do? We have to prepare their partner's capital account, or we may do it according to the system given in your module. As per your choice, there is no problem. Just I have given you the understanding of this profit. Also, I will give you the understanding of this one. Yes, he has given you balance has taken over. S and company. Profit on revaluation is 36,000. Yeah. So this is with you. Need not to prepare too much big partners capital account. It is very simple and easy. You may do it like this. Whatever is the balance given in your balance sheet, it is 1,20,000 and 80,000. We need to know that reserves will increase your partner's capital account. So you have distributed the reserves appearing into the balance sheet by crediting it to the partner's capital account, by adding it into the partner's capital account. So that has been added. If there is some loan, that will be deducted. If it is a loan given by the partners to the firm, then it will be added. If it is a loan, means it is according to the assets and liability system. You know it better. So 36,000 36,000 is also allocated. Finally, you go to the balance 165, 750 and 95, 250. So whatever is given in the entry, is that same? Yeah, it is same. B 1,65,750, S 95. In the same manner, you will do for the second form. And the entries are very simple. This is in front of you. Capital account entry is also clear to you. B's current account is transferred to B's capital account. This is another thing which has been done. We will discuss it within a minute. Just let's tell me, is that clear? Both the points are clear. Capital in the new form. Now we will come to the point of capital in the new form. Last point which comes to us. Just like S and company, you will do into the T and company. My dear students, is that clear now? Now, he says pass the journal entries in the books of BST and company, assuming as excess and deficit capital, taking T's capital as a base. You will have to adjust the capital also according to the system we have studied in the +2 when you was doing adjustment of capital. That you know that, very good, beta, very good. You are doing it. It's really good. Vandana, very good. Sharon, very good. Everyone is doing very good. Old profit sharing ratio of S, very good, very good. We have to present as table in book or as entry of goodwill. Beta, goodwill adjustment can be done in any manner because it is in working note. But the way which has been given by which has been used by you, that is all depending upon your choice, because he has demanded it specifically to my option. Yeah, compute the adjustment necessary for goodwill. So that you have to do in this way, that is more better. The presentation they have given is always this is good, there's no problem. This presentation is okay, but you have to make working note for passing entry and all that to get the net amounts, and that is to be adapted here if it is difficult for you. Otherwise you can do it directly. There's no requirement of doing anything else. So here, after getting capital balances, that is with you, you have to note it down that now balances are with you, B, S and T. How much is the balance of B? That is with you. S balance is also with you. T's balance is also with you. Just note it down. Balance has taken over. Now take T's capital as base. He says T's capital is to be taken as base. And if T's capital is to be taken as base, obviously total capital is to be calculated accordingly. What is the ratio now? In the new form, the ratio is given to you. It is 3:2:1. So what you have to do is, you know that first of all, get the total capital as we are calculating in +2, 71,667 into 6/1. So you will get the total capital 4,30,000. So this 4,30,000 is to be allocated between thrice the partners, and accordingly you will get how much amount is to be brought by them. Yeah, before that you have to make adjustment. It's better to prepare partners capital account, because in this case it will be difficult to make all these adjustments. If you can understand it, it's better. Otherwise you can prepare partners capital account. I suggest that you should have to prepare partners capital account if you are feeling it difficult. Otherwise it is okay. They have made adjustment of goodwill in this. And finally, whatever is the capital, that will be taken as a base. So here 70,000 will be taken as a base to calculate the total capital of 4,20,000, which is divided into 3:2:1 ratio. And whatever is the difference, this minus this, will be paid to them or brought by them as per the case. So transfer to current account 54,250. This is the deficit that he have to, because his capital is 1,55,000. He will have to bring. So that has been transferred to current account, because in this case he says it is to be transferred to current account. 1,40,000 minus 1,10,000. He will also brought this amount. So it has been temporarily transferred to current account. See, but he has mentioned, he has demanded to transfer it to the current account. If he says you will have to bring capital in this case, then we will pass it to cash or by cash as per the case. It's very simple as normal. Expecting this question is clear. Amalgamation concept is clear. Very good, very good. Students are saying everything is clear. Very good, good comments. If everything is clear, please send the comment. कम से कम एक ना boost up हो जाता है कि बच्चों को समय लग रहा है. तो बेटा, if it is clear, send me yes. If it is not clear, send me no, so that I can review it for you. So we will meet after the break. Sir, have a break. welcome back after the break, beta. Sushil, I don't understood your point. Please clear. 100% clear cut, sir. Basically, I don't understood what you are interested to say. Please repeat it. So, beta, your query before the break was specifically regarding the questions not available to you. I asked the ICAI, they tell me that you should have to send a ask my query. In there is a section given ask my query. You should have to go into the ask my query and tell them that notes are uploaded or not, because they will help you in that case. You will have to send your query to them. ask my query में जाके आप लोगों ने ऐप में ना ask my query की ऑप्शन है, वहां जाके आपने करना है. Is that clear, बेटा? So I'm going to help you in one more way also. You may take the screenshot. I am going to show it on the screen. All the questions, whatever I have sent for uploading, you may take the screenshot of all the questions. Question number 1 we have already done. You may take the screenshot of this question. Already done. Then question number 2 is started. Question number 2 is started. This is question number 2. Take the screenshot. Question number 2 completed. Question number 3 is there. Question number 3. Question number 4 is there. You may also take the screenshots later on by revisiting on the YouTube channel of ICAI, because it will remain in the record. Even in your own app also you may take it. Question number 5 is there. Yeah, question number 5. Question number 6 is there. Again, part of question number 6. Question number 7 is there. Question number 7, some part, and question number 8. Question number 8, question number 9. Question number 10. 9 के बाद 12 है. This is 9, 12 also after the 9th, because this is according to my notes. Question number 12 completed. Question number 13 is there. 13, then 15, then 14. Then one more question is there, question number 18. This is 14th, second part, remaining part, and then question number 18th is there. Question number 18th. You may ask the queries from these questions in the next lecture, but don't expect answers from my side, because that is not possible. To calculate answer of each and every question, it takes hours, because you know it better. You may send your answers so that we can verify with each other. So students must have to, some students may start from the beginning, some may start from the end and do the questions. So I'll help you to compare the questions with each other so that you are benefited in this way. So these are the questions for you. Let's come to the amalgamation, what we are doing. Yes, we can do one more thing in amalgamation. We will pass entries in the books of S and company and T and company, just for your understanding, so that you have, in the less questions you can understand better and do more practice. So what we can do, journal entries in the books of S and company. That is very simple. Revaluation account debit. To whatever the assets are there whose value is changed, so that has been discussed with you, that in the given question, value of debtors, stock, furniture remain intact, only the machinery and building value is changed, and a provision for debts is to be created of rupees 4,000. So accordingly entry will be passed. Yes, it is two building, two machinery. No, it will be machinery account debit, building account debit, because both are upward valued. Both are valued upward. So there's an increase in the value of assets. So the entry will be passed accordingly. This will be machinery account debit, building account debit, to revaluation. Value is already discussed earlier also. Again, I am telling you, it is value of building, is 25,000, taken over at 50,000, so increased by 25,000. Machinery increased by 15,000. So this will be the entry, first entry. Right narration also being, if you will pass entries, if it is demanded in the question, otherwise it will be done in the revaluation account. And then next entry will be regarding revaluation account debit, to provision for doubtful debts, 4,000. The next entry will be purchaser account debit, BST, and company debit. Liabilities account debit. Liabilities में क्या क्या है? Just check it out. What is in the liabilities? Due to extend company, 40,000. Creditor 60,000. Due to extend company. $40,000. Creditors debit 60,000. Provision for doubtful debts debit 4,000. And what are credited? 2. Stock, because starting from cash, maybe it was from cash, then bank, all these will be credited. To cash, to bank, to stock, to debtors, furniture, T and company, T and company, furniture, machinery, building. So all these will be seen here. Question number 14. Why not adjusted cash? Just wait. Just let me do this question for you so that I can complete. This is illustration number 1 of amalgamation which is going on. So I am just doing it extra for you so that you can understand the concept of preparing books of accounts of vendor also, or the person who is going to merge his firm into the other firm. It is 10,000, it is 15,000. Stock is worth rupees, maybe it was 60,000. Debtors 80,000. T and company 50,000. Furniture 10,000. Machinery 90,000. Building 25,000. No, 50,000, sorry. Building 50,000. Maybe all assets are transferred, or is there anything left? Cash हो गया, bank हो गया, debtor हो गया, stock is done, furniture is done, machinery is done, building is done, and creditors are also gone. Extend company is also transferred. Okay, my dear. In addition to that, you will have to charge the amount of goodwill from him. So that will also be there. So that will also be entered. So get the balancing figure that will be transferred to BST and company. BST and company will pay this plus 50,000. because he will pay for the goodwill also. So whatever the amount here, you will have to charge 50,000 in excess from him, because you have to charge for the goodwill also for rupees 50,000 from him. So we may pass an entry in that way also. Then whatever is the profit or loss on revaluation, that will be transferred to the partner's capital account. The difference of this plus 50,000, so that 50,000 will be the profit to you. So that will be either named as capital reserve, or that may be transferred to the partner's capital account directly by passing an additional entry. You may also do one thing. You may make an entry of BST and company for rupees 50,000 separately by doing two partners capital account in profit sharing ratio, that is 3:1. This entry may be passed also. Then revaluation profit or loss will be there, that will be revaluation account debit to partners capital account, to B to S, whatever is the profit. Purchase consideration, whatever you have taken, that will be either mentioned as purchase consideration, or that can be done in this way also. Is that clear? So this is the system how entries will be passed in the books of your vendor. So final entry will be partner's capital account will be adjusted with the amount due from the person to whom payment is to from whom payment is to be received. So partner's capital account, after preparing partner's capital account, that is reserve is to be transferred to the partner's capital account, and finally whatever is the balance of partner's capital account, that will be debited to BST and company, and obviously it will tally. BST and company account will tally, partner's capital account will be closed. So come to the next question of your amalgamation. Let's do it. Illustration number 2. Illustration number 2. Yes. Read this illustration. Let's do it. Till that time, I would like to ask query of check the query of Sonu Kumar Singh. Sir, in question number 14, why you adjusted cash balance with creditors instead of keeping as saving for expenses? Beta, whenever we have to keep amount for expenses, it must be mentioned in the question that this much amount is to be kept for expenses. If nothing is mentioned, then whatever is available with us in the at the first instance will be paid to the creditors. This is the rule. Okay. Illustration number 2 of amalgamation. On 31st of March, Raman acquires on payment of rupees 80,000 the business of Gupta. Taken over the assets at these values, whatever is given to you. There were no change between 1st January and 31st March in the book value of assets and liabilities not taken over. So some assets and liabilities are not taken over, it is clear. Same set of books has been continued after the acquisition. So Sri Raman acquires the business of Gupta and Company, and the same set of books are to be continued after the acquisition, and no entries of the acquisition have been passed except for payment of rupees 80,000 made by Sri Raman. So this is made clear that the set of books are continued for next 3 months, as the work has been done on 31st of March 2012. But he says from 1st January to 31st March, the book value of assets and liabilities not taken over remain unchanged. Balance sheet is given to you on 31st of December 2012. From the following balance sheet trial balance, prepare business purchase account, that means for the account of purchasing the business, profit or loss account, and the balance sheet as on that date. So we have opening balance sheet with us, and business is acquired after 3 months from this date. So this is the balance sheet given to you. Shri Gupta and Shri Singh. So this balance sheet is of Messrs Gupta and Singh. So this is a firm which has been merged, which has been closed. So what you have to do? On 31st of December, trial balance is also given to you. So this is a closing trial balance given to you. So how to do that? Very simple, very easy. Let's understand that we should have to keep it into our mind the concept of partnership, which we have done in admission, retirement, death, change in profit sharing ratio. That will help us to now. We should have the memory of amalgamation with us, because amalgamation is also done by us. So accordingly, we will do that. It's very easy, very simple. In our business purchase account, what we will do? Whatever assets we have acquired, that we will enter in it. Whatever liabilities we have done, that we will do. So both will be done. First of all, he has demanded from you. Check it out. What he has demanded? He have demanded from you, prepare business purchase account, profit or loss account for the year ended 31st of December 2012, and balance sheet on 31st of December 2012. So preparing business purchase account is comparatively very easy, very simple. He says we have trial balance on 31st of December. Check what is the status of trial balance. For that, 80,000 is paid by him. So whatever 80,000 is paid by him, that will be appearing as a business purchase account in your trial balance. So in your trial balance, what is there? In your trial balance, there is a debit balance of business purchase account. So we will enter it accordingly. In addition to that, in our opening balance sheet, there were investments and insurance policy. So you have to close that account also, no? Because business purchase account is to be adjusted with the entries to be made. So two balance brought down, we have done 80,000. Whatever assets and liabilities are taken over, that will be entered here. Here it is given to you. We have investments worth rupees 5,000 with us, which has been taken over. See from here, investments 5,000, insurance policy 2,000, stock 40,000, debtors 30,000. So all these will be Just a moment. Yeah, here it is mentioned. He says the business of Messrs Gupta and Singh taking over at book value the following assets and liabilities. He has taken over debtors, furniture, stock, and creditors. So you have taken over only these four. Now remaining are not taken over by him. So what are the remaining? Check your balance sheet. Debtor, stock, creditor, and furniture. So leave the debtors which has been taken over. Stock is also taken over. Creditors are taken over. So these are taken over. Furniture is also taken over. Investment and insurance policy is not taken over. In addition to that, Gupta, Singh and bank loan are not taken over. So these accounts will also be appearing in your trial balance because same set of books are continued. If same set of books are continued, it means for we have not closed our books of accounts. So for that reason, you should have to close the books of accounts first. You have to reverse the entry of to investment to insurance policy by bank loan, by Gupta, by Singh, so that we can close our books of accounts properly. Now see here, these are taken over at which value? 35,000 plus 3,000 plus 46,000 minus 10,000. 35,000 plus 3,000 plus 46,000 minus 10,000. See here, assets are taken over at, that is given to you, 35 plus 3 plus 46. So this is total rupees 84,000. Minus liabilities taken over worth rupees 10,000. So 74,000 is the total amount payable by the purchaser. Amount to be paid. But actually he has taken over the business at which value? Actually payment is 80,000. So first of all calculate the difference, that is 6,000. This is called goodwill, because whatever extra is paid by the purchaser to the seller is called goodwill. So 6,000 will be the amount of goodwill. So that will also be closed because goodwill is also bearing with us. So business purchase account is closed first because same set of books are continued. So if same set of books are continued, then obviously all the assets, liabilities, everything will remain continued. But the assets will be taken over at the new value, liabilities will be taken over at the new value. So these will be continued. Means the books of the previous business is not closed, it continue with the new business. So in that case, you should have to recheck your value of assets and liabilities. It will be to balance brought down 80,000. Asset not taken over investment and insurance policy. Now that will also be closed. Bank loan is also closed. Then goodwill is also there. That is 6,000 rupees that I have calculated for you. And capital account is also closed. Finally, whatever is the balance that will be there. Then uske baad what we have to do, we have to calculate the profit or loss balance sheet figure, profit up to 31st of March, whatever is the difference, that will be the profit or loss borne by us, that is 13th on. So this is the profit or loss of rupees 13th on with us. This is the balance sheet figure that will be given to them. Then profit or loss account is to be prepared as normal. As normal, we are preparing at the end of the year. So that we are prepared to opening stock, to purchases, to expenses. This is a closing of books of accounts as a normal books. Then we have got a profit of 13,000 this year. So that will be transferred here. Sale, closing stock, balance sheet figure will be the net profit, go to Raman's capital account. This is not a proper way of amalgamation. This is basically amalgamation with same set of books are continued. And it is a normal question. It will check your basics that we have, but we have the knowledge of doing the question. Then a balance sheet is prepared in a normal way. Goodwill is entered. All the assets, whatever is available with us, that is transferred in it. That's very simple question. This is a good thing which has been calculated here, 13,000 rupees. How it is calculated? He have seen that debtors valued rupees 30,000 are valued for rupees 35,000. So there is an increase of rupees 5,000 in the value of debtors. 40,000 stock is valued at rupees 46,000 at the end of the year, at the end of 3 months. So during these 3 months, whatever is the increase in debtors or the current assets is taken as that this is a profit, and whatever is the increase in liabilities, that will be assumed as a loss to us, and accordingly this is calculated. Next is the illustration number 3 given to you. Illustration number 3, read this illustration and try to do yourself. In illustration number 3, he has mentioned that we have decided to amalgamate our two firms. One is X and Company and second is the Y and Company into a one firm named as XY and Company, where A, B and C would be the partners with 4:5:1 ratio. Very simple question. This type of question may come into your exam. Whatever we have done, illustration number 1, and this is the illustration number 3. This type of question may come into your exam. Illustration number 2 is somehow different. That is not of the normal partnership basics. So we have to make the adjustment of goodwill in the same way as we have done in illustration number 1. And also prepare the balance sheet of XY and Company by keeping partners capital account in the profit sharing ratio, taking B's capital as a base, excess or deficiency to be kept in respective partners capital account. So all things are given to you. He is interested from your side to do that. For doing this, you should have to go into the books of the vendors also, because without going into the books of vendors, you are unable to solve it. So illustration number 3 tells us how to go into the books of your vendor and do this. So for that sake, just see, first of all the assets and liabilities are transferred, so there is no worry. He says goodwill is valued at this amount, building, machinery and vehicle are to be taken over. This is the same question whatever we have done in the previous case. So I would like to tell you that you should have to do it at your home so that it will be easy for you to understand each and everything. It will be a good question for your practice also. Yeah. Similar question, 100% similar question. Again, there is a question number one. Question number one. This is of, yes, this is again same amalgamation. This is again same of amalgamation. P and Q are partners. Ratio is 3:1. Q and R are partners. Ratio 2:1. Similar question. Decided to amalgamate and prepare a firm named as PQR Limited, PQR and Company. Sorry. Now this firm is going to take over all the assets and liabilities. Building has been taken over at rupees 1 lakh. Plant and machinery 2,50,000. All that information is given to you. You are required to prepare the balance sheet of new firm and capital account of the partners in the books of old firm. So I would like to help you in this question by preparing revaluation account and partners capital account, but you have to do it with a good speed. I would like to do it for you. Revaluation account of P and Company. In the books of P and Company. This will clear your concept of amalgamation. Okay. Revaluation account. Particular amount. Particular amount. Very simple to understand that whenever any value of any asset or liability is changed, that will be entered here. So the first form is named as P and Company. P and Company's building is valued at rupees 1 lakh. So building is earlier valued at rupees 50,000. Increase in the value of building by rupees 50,000. Plant and machinery is valued at 2,50,000. So it is increased by 1 lakh. Plant and machinery increased by 1 lakh. Stock is appreciated by 20%. So stock is appreciated by 24,000. It means for goodwill valued at 1,20,000. Provision for doubtful debt has to be carried forward at 12,000 in respect of P and Company. 12,000. So this is a loss to us. Nothing else. So building 50,000, plant and machinery, enter it. To it will be by building 50,000, plant and machinery fast 1 lakh, stock appreciated by rupees 24,000, provision for bad debts 12,000. Check. Is there anything else? Fast. Do it with me. Which has been revalued. So building is okay, plant and machinery is okay, stock is okay. Yes. Provision for doubtful debt is okay. What is the ratio for allocation of profit in the between the partners P and Q in the ratio of 3:1? So get the profit, whatever is the profit. Tell me how much is the profit. 84,000 is the total, 72,000 is the profit allocated in the ratio of 3:1. Then partners capital account is to be prepared. Partners capital account. Check your speed. Could you prepare it with speed or not? We have only Maximum 5 minutes to solve it. Fast. P Q P Q. Balance brought down करेंगे. First of all, balance is to be brought down. It is 2,40,000 and 1,60,000. Reserve is to be allocated 240, 160. Allocate the reserves fast. 50,000 is the amount of reserve. So it will be allocated at 37,500 and 12,500. Profit on revaluation is there. Revaluation profit 54,000, 18,000. Fast, 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 fast. Reserve is allocated. No other loss is there which is to be allocated. No other profit is there which is to be allocated. Goodwill is to be entered. So goodwill is to be entered. For that, you have to prepare one more thing. See here, this is to be done by passing a journal entry also, but we have done it in a different way, because in ICAI module you have checked that it is done in a different way. This is the most important thing which you have to understand now. Yes. Profit on realization, because we have allocated reserves. Revaluation profit is already allocated. Revaluation profit is rupees, just a moment. Revaluation profit is 72,000. Okay. Yes. Now see the PC, purchase consideration, just like as we are doing in amalgamation, that we have to do now. The value at which assets are taken over will be entered here. The value at which assets are taken over. So see here, goodwill is taken at rupees 1,20,000, that is given to you. Building 1 lakh, plant and machinery, office equipment, stock, debtors, bank balance, cash in and due from X and R and company. So all that is taken over. Creditors are taken over. Provision for doubtful debt is taken over. Bank overdraft is taken over. So finally it comes 2,12,000 rupees as a liability is taken over, and assets are taken over for rupees 9,44,000. So the final amount is 7,32,000, which is to be paid. 7,32,000, which is to be paid by the purchasing company to the vendor company. $7,32,000. Is that clear? Now we have to prepare realization account as we are preparing in normal case. Assets account debit to liabilities account as we are preparing in normal case. So assets account, realization account debit to assets, the value at which it is to be, it is kept in your books of accounts. We have kept it in books of accounts for rupees 50,000, 1,50,000, office equipment 20,000, stock in debtors, whatever the value is given to you. So finally 7,32,000 is received from PQR Limited. Balance sheet figure 2,82,000 is our profit. Balance sheet figure of rupees 2,82,000 is our profit that he has calculated. There is some, I need more time. Doesn't matter. I will do this question for you in the next class because time is already over. So we will do it in the next class. It will be easy for you to understand in the next class. So I'm closing this session. You may try this. Doesn't matter. We will discuss it in detail because there are some new concepts which need more time. I expect your speed is good now. You have done it up to now, up to this. So whatever is done, we will close it in the next session. Okay then. Thank you. Pardon? हाँ, सेशन ओवर कर दो आप.